In this video, you'll learn the top 2 ways for making money from economic news events. Now, the first one involves trading into the risk event. This is basically where you buy or sell the currency in the days before the actual release and ride the move that occurs. The second one involves trading out of a risk event. Now, this is where you wait for the figure to be released and then you buy or sell the currency based on the deviation in the data. Now, the biggest factor, however, is something called market sentiment. And if you're trying to trade economic releases without market sentiment, you're going to experience lots of confusion, frustration, and losses. Hi, it's Arnie here from Forex Source, and before we begin, hit the button below to follow or subscribe so that you will be notified every time that we release a new video. Okay, so you are probably aware that news moves currencies, right? You've watched it happen time and time over again. Now, when it comes to actually trading the economic releases, let's say from a calendar, you end up getting stopped out or you end up watching the price go in the opposite direction than what you thought it should. Now, we know it can be very frustrating, but we also know that when you apply 2 simple tactics, you'll see way more consistency in your news trading. Now, the first tactic we're going to look at is known as trading into risk events. Now, this basically just means that you anticipate a price move as the economic release time gets closer. For example, if there is an unemployment figure being released from the United States next week, this could provide us with a great opportunity to trade into it. And let's see how all of this will work. The first key point that we need to know for trading into a risk event is we need to know what the expected number is and what the previous number is. There must be either a positive or a negative deviation from that previous reading. For example, let's say the previous reading came out at 5%. We need the forecasted or the expected number to be either higher or lower than that. Next, we need that forecasted number, this is very important, to line up with the prevailing market sentiment. For example, if the previous number was 5% and the forecast is expecting the next one to print at 7%, this would represent a positive expectation. But if the market is very negative on the currency at that time and everybody is selling it, we would not view that risk event as tradable, at least trading into it. Despite the expected positive reading, the sentiment of the market at that time will most likely cause traders to simply ignore that particular data point. Now, on the other hand, if the sentiment was positive, and then we also had a positive expected figure on the horizon, it's likely that the market would buy the currency into that event. Now, all of this means that the currency would most likely rise in price in the days leading up to that specific economic data release. Now, as you can imagine, this can provide us with great trading opportunities. And when we have the forecast and the sentiment lined up like this, trading into risk events can be extremely profitable. Now, the second tactic that we can use for trading economic news events is trading out of them. Now, this just basically means that you wait for the actual data figure to be released and then you enter based on whether you see a very big positive or a negative deviation from that actual figure or in that actual figure. So let's quickly see how this method works, right? With this strategy, the key is how the actual number deviates from that expected number. Now, we would trade out of risk events if and when the actual number deviates from the expected number in the way that lines up with the prevailing market sentiment. Now, a simple example is when the market sentiment is positive and the expected number is negative, but the actual release comes out with a big positive surprise deviation. For example, imagine the current sentiment is positive on the dollar and the previous number for the risk event is 5% and the markets are expecting a 3% number. So we know that the expected number is a negative deviation. But the actual release comes out with a big positive surprise at 7%. And that would be a very big deviation in line with the current positive market sentiment. So any deviations, higher or lower, in line with sentiment can cause the price to move and obviously give us a clear trading opportunity. However, as you might have guessed, it's not always quite that simple. And again, like the first example, the most critical factor in all of this is the prevailing market sentiment. That sentiment must match the deviation in order to generate a clear tradable move. For example, if the number prints a positive deviation, but market sentiment is very negative around the currency, any reaction is likely to be muted from that data release. So we need that deviation to match with the prevailing sentiment. This means that you should only trade risk events when you know specifically what you are waiting for to happen. You can then plan how you will react and how you will trade it, which of course gives you a much clearer and higher chance of making money from these events. Now, as you probably noticed, the key to trading economic news events is not in the news itself, but rather that prevailing market sentiment on that currency. Without the context of the market sentiment, the news releases is virtually meaningless. And if you've ever tried to trade news without factoring in the sentiment, you'll know exactly what we're talking about, and you'll know that confusion and frustration that it can cause. So make sure to pay attention to the market sentiment when you try to trade economic news releases. Guys, thanks for watching. The idea for this video came from you guys that asked us questions about the fundamentals in the comments section. So please keep all of your questions coming. And as always, do us a big favor and click the like and the share button if this content was helpful. We'll catch you guys in the next video.